Imagine you are playing a game of coin toss, and every time it lands a head, you will win $1,000. Even if the coin lands a tail, you still end up making $100. Now, if I were to ask you, will you be interested in playing such a game? We'll be happy to play a game because the risk is minimal. Even if the coin is head or tail, we end up making a lot of money. Now, I want to tell you that this game actually exists and it's called investing. In this video, I am going to show you how you can create wealth with least risk. So let's get started. We all aspire to be wealthy. We all work day in, day out to create wealth. Now, according to me, wealth is not just about having money. It's about having the time, having the freedom to do whatever I want to do at my own will. So, if this is your goal, then stick to the end of the video. I am going to blow your mind with some amazing stories and equations that will definitely help you with your wealth creation journey. So the stories that I am about to share is inspired from this book called the Dhandho Investor. It is written by Mr. Mohnish Pabrai. He is an Indian-born American businessman, entrepreneur, investor, and a philanthropist. The word Dhandho is taken from, it's a Gujarati word having a Sanskrit root in Dhana, which literally means wealth. And together, Dhandho means endeavors that create wealth or literally business. In this book, Mohnish Pabrai tries to explain or tell us a framework called as Dhandho Framework, where we can earn high returns with least risk. So this framework is explained with 4 stories, and I'm going to be sharing those 4 stories, and in the end of this video I am also going to share you some interesting equations and the framework which you will require if you are planning to make investments, take on risks, and so on. So the first story is called as Patel Motel Dhandho. Did you know that more than 50% of the motels in the US is owned by a small subsection of Indian community called as Patels? Now, there's an interesting story behind this expansion of motel empire. Back in the ancient India, there were a group called as Patedars. They were responsible for collecting the taxes, managing the land, and looking after the disputes and sort of things. Now, they were very wealthy and they were also entrepreneurial. But as their community grew and the lands were divided among their children, they were not able to make enough money. So, a subsection of those Patedars migrated to Africa, to Uganda actually, to help the country in building railroads and other trade. With the same skill, they were able to amass wealth in Africa also. But unfortunately, in the 1970s, there was a new president in Uganda called as General Idi Amin, who came to power in Uganda as a dictator in 1972. So he declared that Africa is for Africans and decided to expel all the other nationalites from Africa. So unfortunately, these Patels also lost their wealth, and all of them were forced to migrate to different countries. So from Africa, there was a small section of Patels who migrated to US as refugees. So they end up in the US with little or no money in a foreign land, not knowing the language, and with family, and they were in a lot of trouble. So here is the interesting turn. US was in a recession, so a lot of Native Americans were planning to sell their motels. So this was actually a boon to Patels. So he decided to raise some money among his friends, and usually when someone buys a motel or a property, he can just deposit 10 to 20 percentage in initially, and the rest can be financed through a bank. So the initial amount was very little. And another benefit for the Patels was he was staying with his family, and if when he bought the hotel, he and his family decided to move to that motel, and they used to stay there, and they did not hire any outside party to operate that motel. So they were operating the motel, they were staying there, and they also had only vegetable food. So that was helping him save a lot of money, and within a few years Patel was able to repay his debt. Now seeing the success of this motel business, Patel started to buy more properties and more motels, and the rest is history. Now you may say that Patels had an advantage of reaching in the US during the recession, and that was an one-time opportunity. Now listen to the second story, which is about Manilal Dhandho. Let's say Manilal is a second cousin of Patel, and he reached the US with the knowledge of English, and he was trained as an accountant. Now this story is completely different that of Patel's. He reached the US, but without any prior experience. He was having trouble finding an accounting job. So he was with his family, so he was having this pressure to find a job to earn the bread. So he decided to work at a nearby gas station. So he worked day in and day out, earning a minimum wage of $3 per hour. Now he worked there for a long time, and eventually he started hearing about this opportunity nearby, where he was eventually transferred as an accountant. So during his stint, now he had to work shorter hours. So he decided to take up a second job at a gas station nearby. Now he worked day in and day out. He actually managed that gas station as an owner. So seeing this, the owner himself agreed to pay him 10% of the entire profit that was generated from these gas stations. So eventually he was able to save up a lot of money, and during the 9/11 crisis, there were a lot of gas stations and properties which lost a huge value. Seeing this opportunity, Manilal ended up buying a lot of properties and businesses during that time. So this is the second business, and how the Manilal were able to get wealthy during a time of distress. The third story is called as Virgin Dhandho. Yes, it's about the company Virgin, which is owned by Richard Branson. He was running a successful business of music records, and he was earning around 12 million to 30 million per year. And during that time, he receives a business presentation. It's about starting a business between London and New York. I mean, an airline flying business. And he thought this presentation might have ended up in many locations, and it was turned down. That's why he finally received those. So he dig more into it and try to call the airlines that were currently running those services, and he was not able to get through those businesses, or he was not able to book a seat. So realizing that, he understands that okay, there is a market and demand for this service. So he decided to pursue that business. So the first thing he did was call the company Boeing, which supplied aircrafts, and negotiates with them to give him a 747 Boeing airplane for lease for an year. and he calculated that he would need around $2 million to run this service for a year. So he was actually making a lot of money from his other business, so he decided to take that risk. And this story tells us that even without investing a lot of money, just identifying the opportunity and willing to take the smallest risk is highly rewarding. So the last and fourth story is about Mittal Dhandho. So Mittal is one of the wealthiest people in the world. This book was written in 2007. So at that time he was the third most richest person on the planet. He was from a small place called Marwar, and those subsection of people are called as Marwaris, and they are the right people who practices the art of Dhandho. Lakshmi Mittal Dhandho started when he started investing in iron or steel mills. So he had a single small steel mill in Indonesia in 1976, but he ended up being one of the largest steel producers in the world. So how he was able to do it? So in this book it says that in Kazakhstan there was a steel mill which was in a very distressed condition. They were not able to pay their employees. There was a lot of problems going on. Now that Kazakhstan government decided to sell their steel mill. So Mittal took this opportunity and ended up buying that steel mill for a very minuscule price. Similarly, Mittal also bought mills from around the world, for example in Romania, from the Mexican government, and from different parts of the world which was in a distressed condition. And he ended up working hard, revitalizing those steel mills, and end up being one of the wealthiest people in the world. The art of creating wealth with least risk is called as the Dhandho Framework. The Dhandho Framework, as written in this book, have 9 laws or principles. The first one being focus on buying an existing business. The second one, buy simple businesses in industries with an ultra slow rate of change. Buy distressed businesses in distressed industries. Buy businesses with a durable competitive advantage. Bet heavily when the odds are overwhelmingly in your favor. Focus on arbitrage. Seventh principle is buy businesses at big discounts to their underlying intrinsic value. 8. Look for low risk, high uncertainty businesses. And 9. It's better to be a copycat than an innovator. Before I end this video, look at this screenshot. You can see that I almost doubled my investment. So this was during the pandemic in 2020, which was the first time that I invested any of my money. So I've been reading a lot about investing and stocks, but I was not really trying those things. So in 2020 I was quarantined, and there were a lot of apps which made it really easy to invest in any of the businesses with a few clicks. So I downloaded this app and invested some of my money, and within a few months actually I was able to realize 100% gains. That it means that if you put in a 10,000 rupees, you end up making 20,000. So you can see that it is a small amount that I have shown you, but that was my beginning in investing, and how I was able to learn that there is a lot of opportunities out there to make a lot of money. But something you have to note here is that capital is really important if you are setting out to make money by investing. By capital means the initial amount required to invest in those businesses, or if you are planning to buy a distressed property. So for that you have to work hard, and I hope that you enjoy your work and whatever you are doing, and always try to build several income streams by freelancing, by owning a piece of dividend stocks, or just simply following your passion, maybe taking photographs, singing at events, and it can be anything. So I encourage you to build multiple income streams and create a capital, so that when the right opportunity comes, you will be able to take advantage of that opportunity.